Hey, what's going on, guys? And welcome back to my channel. My name is Alex, aka Blood Phantom 81. And today I'm going to be talking about how to hedge specifically with M1 Finance. So this strategy is going to work with other brokerages, but it works especially well with something like M1 Finance. If you guys don't have an M1 Finance account, you can open it using my referral link. Both of us get $10, or you could just use your friend's link or something. It's a brokerage that I highly recommend. I also make lots of M1 Finance videos, so I'll definitely link some of those in the description below. So anyway, let's just get started with the video. So a stock market hedge is something I think I might as well Google just so you guys can get the best definition possible. So a hedge is an investment position intended to offset potential losses or gains that may be incurred by a companion investment. So it's basically this first sentence, okay? So it's intended to offset potential losses, let's just say potential losses, by a companion investment. So it's having some kind of other investment to offset what you may lose in your core investment. So when you think about hedge, you might think about something like gold, or something like a bond or something like that, or maybe even just cash. So I've been thinking about that recently, and I think the best kind of hedge is one that actually grows. What I want to introduce here is something called PIMCO Enhanced Short Maturity Active Exchange Traded Fund. So this is an ETF, ticker symbol MINT or MINT. And what this is a multi-asset bond fund. It's short term. It's about 50% US bonds. The others are non-US bonds, a little bit of cash, and some other. Basically, what this is an ETF that doesn't actually move that much in share price. So between, let's say, the past 5 years, on average, this thing has hovered around, let's say, $101, with the low being here at $100.50, and the high here being $101.84. And so, but for the most part, like I said, the median price has been around $101. If we take a look at it from a long-term perspective, pretty much you can see the same thing. It's been around since 2010. It started out around $100, excluding this weird candlestick. But yeah, like I said, for the most part, it just hovers around the same price. Now, what I like about Mint so much is the dividend yield. So Mint actually has a pretty nice dividend yield of 2.31%. And if we go back 5 years, we can see that it's actually increasing. Okay, so here in 2014, it started out paying around 6 cents a share, but ever since then, it does increase every single year. I don't think that's guaranteed to increase every single year, but as of right now, this looks like a very attractive investment. So essentially what you'll do is you'll have your M1 Finance core portfolio, and you'll also have Mint. So why don't I show you guys what I mean exactly. So this is a sample portfolio that I called mutual funds. And this is basically just two different positions. It's a growth portfolio and a hedge portfolio. And based on your risk tolerance, you can alter how much you want hedged. If you want a 10% hedge, then that's totally fine. And you would have some kind of a 90-10 relationship. Let's say you guys are a little bit more advanced in age, and you need some more of a hedge, then you can do a 15-85 relationship. But it's all up to you what your risk tolerance is. So the thing I like about this so much is that instead of cash, this thing will actually be growing while your investments are staying the same and doing whatever you want to do. It just means that a small part of your portfolio is growing at a 2% yield every single year, and you get protected a little bit. So let's go ahead and just look at this portfolio. Why don't we go ahead and exit? So like I said, this is just a sample portfolio. I have no actual money in this portfolio. But this is about maybe 20 stocks. I made a video about my growth pie. So this is things like Visa and Google and Amazon, Apple, things like that. And so I also have this hedge. So it's split between this 95 and 5. I think that's a pretty good relationship. And so what's going to happen is you can decide to plan around this hedge. So for example, every time the stock market drops maybe 10%, like we've had in recent times, let's say we have a really nasty correction, like a 10% correction, what you can do is actually alter the amount of hedge that you have. So you can actually sell this, you can remove it and place it back into your portfolio, or however you want to reallocate the money, you can do that with M1 Finance. And let's say you have two different positions. You have a hedge just for a 10% drop, and you have a hedge just for a 20% drop. So if the stock market drops 10%, you release that first wave of hedge. And then if the stock market drops 20%, then you can release that second wave of hedge. Over the past 5 years, we have had quite a few significant drops. So this past one from October was pretty close to a 20% drop. Actually, it was a 20% drop. So you can have one there. You could have deployed the hedge there. Here in the summer of 2015 to 2016, we had a drop of about maybe 15%. So you could have used some of your hedge on that. Here in 2011, let's see how much we dropped. Let's zoom in a little bit. Okay, this was a 21% drop. So this is the kind of thing I'm talking about, and this was inspired by seeing a lot of people saying that they don't have enough cash to reallocate into their portfolio because all their cash is basically in stocks. So in this sense, your money just isn't sitting around and doing nothing and losing value to inflation, but it's actually increasing at a 2% rate. So that's the kind of thing I'm talking about. You guys can just play with the numbers and think about whatever works for you, whether it's 95-5 or 90-10. It's all up to you. Like I said, I just want to provide the information and talk about a really cool ETF that I was looking at the other day. So yeah, so that's gonna be it for this video, guys. I hope you guys enjoyed it, and I hope you guys learned something. Have a great day trading.